The trading day in Europe has just begun, with the situation in Ukraine heavily weighing on investors' minds. The US has paused military aid to Ukraine, which has influenced the market, particularly defense stocks. Meanwhile, President Trump has imposed new tariffs on goods from Canada, Mexico, and China, escalating tensions. Canada has retaliated with tariffs on US imports, and China has imposed. Markets have reacted negatively, with US stock markets falling as a result. In Europe, stocks are also sliding as investors seek safe havens, such as sovereign debt. Economists warn these new tariffs will negatively impact the US economy, particularly manufacturers. The toy industry is already feeling the effects, with companies facing higher costs on imports from China, which could lead to higher prices for consumers. In Canada, there are concerns that the new tariffs could push the country into a recession, with the economy facing challenges. The Canadian government is preparing for retaliatory measures, but the long-term impact remains uncertain. In Mexico, the peso has fallen as a result of the tariffs, and companies with operations in both countries may reconsider production strategies to avoid the impact of the new tariffs. While tensions continue to rise, experts predict that Mexico's and Canada's retaliatory tariffs will be met with further negotiations to try to restore trade relations to normal. In China, officials have expressed a willingness to fight to the end in the trade war with the US, but the Chinese economy is already struggling with weak growth and domestic issues. The global economic landscape remains uncertain as these trade disputes continue to escalate, with consequences not just for the US, but for international markets. The full impact of these measures will become clearer in the coming weeks.